Cheap loans giving young Greeks the chance to have their own home. Artemis, a 30-year-old teacher, unmarried and with a 5-month-old girl, had given up on buying a place to call home. She has started a property search close to where she lives in Glikinera, a densely populated suburb east of Athens. "It is just unthinkable," she said, "without a cheap mortgage, it would be impossible for her." She added that the reality is that housing costs gnaw off her income. It wasn't that way in the past, and government must create different tools to cover young's needs. Greece's 7-year housing boom has left many young people in the same position, priced out of the property market and forced to cover the cost of increasing rents despite little rise in their real incomes. A surge in borrowing costs after the European Central Bank raised interest rates by 2 percentage points has added to the problem. The scale of the crisis facing young Greeks is very high. As a poll in June showed, about 50% of people aged between 18 and 45 are unable to pay a rent. Housing would remain unaffordable as long as salaries stayed low. The proportion of Greeks spending more than 40% of their disposable income on housing is far in excess of the EU average. That may soon change, however, after the announcements by the ministers regarding a program to restart housing policy. Government program will offer mortgages for as little as 1% to address an affordable housing package that will put home ownership within the grasp of Artemis and many others like her by offering ultra-cheap loans to fund property purchases. Greece is the latest country in Europe to offer relief to people struggling to get or buy a property. Starting early in 2023, the program will begin with €500 million, of which 3/4 will be given by the Public Employment Service and be interest-free. Banks will put up the remaining 25%. The banks will also be responsible for selection based on specific criteria to about 10,000 low-income people aged 25 to 39 by using €375 million in interest-free loans from the government. The initial borrowing cost will be at around 1%. The scheme is expected to apply to about 10,000 people, giving the opportunity to young people to become homeowners and also provide an incentive to upgrade an aging real estate market. The funding would be doubled if there is a demand. The relevant legislation should be passed by the end of the month, while banks are expected to open applications almost immediately. Government also aims to address a shortage in the supply of accommodation, using about €1,375 million to renovate old flats for students and low-income. The government is also planning to move most of public offices and services from the center of Athens to the suburbs over the next 5 years, increasing the availability of space in the city center. The bad news are that experience suggests that the subsidy for home loan interest costs may raise house prices when new supply is constrained, affecting the access to home ownership. House prices have already increased 30% while rents are up 50% in the past 7 years. With high global inflation, people turn to real estate as a safe investment, and Greece is still relatively a cheap market compared to other European countries. The increase in prices has been blamed also on the growth of Booking.com and similar short-term rental platforms, having a more drastic impact on curtailing the availability of housing to local people than elsewhere in Europe. Greek cities have far more short-term rentals that are listed as entire homes than other European cities. In addition, in the neighborhoods close to the Acropolis, old buildings are renovated and turned into small hotels. Tourists are replacing residents, turning traditional Greek neighborhoods into a tourist block. Please subscribe to my channel and click the bell to get alerts when a new video is posted. You are welcome to write your comments, questions, or concerns you would like to share.